Hey Kate, how you doing today?
Good, brother. How are you, Drew?
I'm doing great, man. I'm doing great. I'm super excited and looking forward to our meetup on the 24th, man. I think it's going to be an absolute blast.
Yeah, dude. I am too. Super stoked with the turnout of last month. I'm pretty sure everyone who showed up was brand new. I don't think there was too many people that have been before, so that's really exciting.
Amazing.
So for anyone watching who doesn't know, my name's Cade. This is my best friend Drew. We are both in the business entrepreneurship roles here in Southern Arizona. I'm specifically real estate. Drew is the finance department. And we put together a monthly meetup called Next Gen Referral Network. So if you guys are in any way a business professional in Tucson, Southern Arizona, we'd love to have you at the meetup. On top of the meetup, we are doing weekly updates. So for all of the people who come to the meetup in our sphere, this is the second weekly update that we're doing just to give you guys some insight into the real estate world as well as the finance world. And you guys can kind of take what we're saying and apply it to what you guys are doing. So that's kind of the role and goal for these episodes. So Drew, if you would start us off with the finance market stats.
Absolutely, absolutely. And similar to like what you said, we always like to structure our meetings the same. And so we're definitely going to talk every single week about, the same statistics so you can kind of keep a follow and a track as to what's going on. And so like we did last week, I'm going to talk about the three major indexes. First one being the S&P 500. So last week it was down about 0.3%, but year to date it's still positive 8.04. The Dow Jones Industrial Average was down 0.3% last week, but year to date, about up 2.5%. And then the Russell 2000 was down about 0.5%. But again, that's that more volatile index. And so its swings are up and down. And so we are up to date 11.5% roughly. And our big call to action this week is just making sure you're talking to a financial professional, whether that's me or someone else in your sphere, and just understanding the new changes that just got put into legislation. It's called the Secure Act 2.0. And the biggest two key takeaways that I'll hit on today are the increase in your contribution limits, both on the 401k side as well as the IRA side. So in an IRA or Roth IRA, the increases have gone from 6,000 to 6,500. If you're over 50, you have the catch-up provisions that allow you to go from, they were 7,000 last year, now they're 7,500 this year. On the 401k side, the new maxes are 22,500 if you're under 50, and if you're over 50, 27.5. This is up from last year. It was 19,500 and 23,500. So if you have if you have any questions or anything, I'd love to help you out. But definitely consult with a financial advisor and learn those contribution limit changes.
That's awesome. And Drew,
Kate,
could you
oh,
could you explain before we move on real quickly, why are they doing this, right? From a consumer standpoint, I don't know anything about the stock market or 401ks or anything like that. Why would they be increasing the value that I can put in each year?
absolutely, absolutely. So the simple and short answer is inflation, right? As we age, our dollar becomes less and less valuable. It's done by design. The Federal Reserve likes to keep it at about 3% because as things grow, that's the way to make money is through inflation. So there's a lot of different reasons as to why inflation exists. That being said, it's harder to catch up if the contribution limits stay the same. So increasing that as inflation grows just adds a more proportionate and fair attempt for people who are trying to save for retirement. So
That's awesome. No, that's
yeah,
super good
man,
to know.
absolutely,
Super good to
absolutely.
know. And
How about you? Oh, go for it.
as yeah, no, as we transition here, one thing I'd like to point out as we kind of transition from finance into the real estate piece, it's really good to know what the returns are year over year for those bigger index funds.
Absolutely,
Because
absolutely.
when I go, for me specifically, if I'm going to go, have an investor who's, giving me some private money, let's say, and I'm going to guarantee them an amount of return, I need to know what other financial tools or markets they could be in so I know how to compete. Does that make sense? So
Absolutely.
let's say I have a deal and I go to, investor A and I say, hey, investor, invest with me. I have this deal. I'll get you 8%. And then, they come back to me and they're like, hey, look, I could put it in S&P and make 8%. Like, what's the big deal? So I, as an investor, need to know, okay, what is, the stock market doing compared to what I can provide, right? So for me, I need to look at, investors as more so a return of maybe 11, 10, 12%, right? Before it catches their eye, right? Because they could easily just go to the S&P and make the same money. Does that make sense?
Absolutely. And I think to kind of build on top of that, I think understanding as well their positions and how they would like to, you know, allocate themselves and align themselves, right? If they're a more young and aggressive investor who would be compete or throwing a lot of their money in the Russell 2000, let's say, they are chasing those higher gains. And so, yeah, you would have to compete with that. Whereas an investor who's a little bit on the defensive side and wants to preserve their money and, reflects more of a bond like portfolio, you might be able to get
Yeah.
away with a 6 to 7%. So yeah, as well, understanding all markets, not just the most aggressive. You're exactly right. It's very important.
Love that.
Awesome. Well, what
Love
about
that.
you, man?
Cool, man. So I'll jump into then residential, if that works.
Absolutely.
So
Yeah.
for just like Drew, like you did, again, guys, we're kind of going to restate some of the things we're already doing, right? Similar to last week, just like Drew said. That way you can get a good grasp of what's going on in the market. So you're the most. I'm going to be using Tucson. Okay, so Tucson stats. And one thing I really want to hit on is month supply. So for the month supply right now, January 2023 is 1.6. That means for any home on the market in Tucson, it's going to take 1.6 months to get it under contract. So some important metrics to know as a consumer is, well, what does this mean? So from 0 to about 1 month, that's going to be a typical seller's market. Okay, so 1 month supply, that's a seller's market. Anything that comes on the market, any home for sale, it's going to take 1 month to get under contract on average, right? In that market. Anything from 1 to about 1.5, that's going to be a buyer seller's market. Okay, and then once you hit 2 months, we are now in a buyer's market. Okay, so we are seeing 1.6 in Tucson right now. And it's, I mean, if you guys could see the graph, it's like this. So last year, it's like even flat. And this right now, I mean, it's just skyrocketing. So we're easily going to hit the 2 month mark, which means we're in a buyer's market officially at that point. So biggest takeaway for consumers, if you guys know of anyone or you yourselves are interested in buying a home right now, I can tell you all of my past clients in the past few months have been getting really good deals because there's sellers right now who are getting needy and they need to sell. And so that creates a lot of opportunities for buyers.
I love that. And can you speak? I don't know if you're super familiar with like the lending side or, even on the real estate side, like when there is a shift from a seller's market to more of a buyer's market, what are some of the, advantages that you might have in your favor that you could leverage during that process to assist you through the home buying process?
Yeah, absolutely. So there's three that I really like to hit on, and I preach about them all the time because it's actively happening with my clients now. So first is going to be purchase price, right? That's kind of your first offer. That's the first negotiation piece that you're going to be using as a buyer. So purchase price, first and foremost, that's going to become more in your favor. We're already seeing prices start to moderate. The second piece is going to be seller concessions. Again, this is a credit that the seller gives to you as a buyer, and you can use that to buy down your interest rate, which affects your monthly payment tremendously, or you can use it to help with closing costs. So there's kind of two ways you can use seller concessions. You can actually, depending on the amount of concessions you get, you can use them for both. Okay. And then the third thing is going to be repair requests. So in every transaction, you're going to have a period called your due diligence period as a buyer. And that's when you can request repairs to be done by the seller on the property before you close the transaction. And right now, a lot of buyers are able to ask for many of the repairs to be done, and sellers are going to be more inclined to do them to close on the property due to that month supply, right? because they don't want to go back to market when it's taking 2 months to get back under contract, right? So
Absolutely.
those are kind of the three advantages that a lot of buyers are getting right now.
Absolutely. That makes a ton of sense. That makes a ton of sense. Well,
Yeah.
sweet, man. Well, I know we sort of always like to end on a quote of the day, and I know you were eager to share, so I'd love to hear. What is it, Cade? What's your quote of the day?
So my quote of the day is only listen to people who are in the position you want to be in.
Oh gosh, it's the
So
golden rule, man.
it's the golden rule. And again, I know a lot of you in my sphere, Drew, is younger kind of entrepreneur business people. And often when you get into this space, I'm sure you can relate, there's so many different opportunities. There's so many, opinions and people telling you what to do. At the end of the day, you have to figure out, what do I want to do? What do I envision my life being? And when you figure that out, you seek people who are in that position, right? And then once you find them and you build a relationship with them, listen to them, right? Um,
Absolutely.
I use the example, and then we can wrap up, of high school teachers who are trying to educate their students on financial education, right? And they're telling them how to invest in the stock market. They're telling them how to become financially free, when the teachers themselves are drowning in student loan debt, credit card debt, and they can barely make ends meet, right? So why would I, as a student, listen to you when you're not even doing it, right? Why would you listen to that? So again,
Absolutely.
only listen to people who are in the position you want to be in.
Absolutely, man. I love it. I love it. And I definitely apply that to myself every single day. So awesome, man. Well, thank you so much for your time. And I will definitely catch you next week. I'm looking forward to it.
Likewise, see you soon.
See you soon. Bye.